I'm Yahoo Finance Executive Editor Brian Sozzi, and taking a look at a live shot of the opening bells on Wall Street on this Thursday morning. I'm paying attention to tech play Figma this morning, which will debut at the New York Stock Exchange. You see them there on the podium. Company, once on the cusp of being acquired by Adobe, is valued at about $20 billion ahead of its debut. Catchy ticker symbol FIG for this one, which you could search for on the Yahoo Finance platform. Meanwhile, over at the NASDAQ, you've got Intuitive Machines unleashing the, yes, funfetti. Oh, I like that word. But let's stay on tech because it is the story of the day. After strong earnings report from Alphabet and Netflix, the market was firmly ready to hear about amazing numbers from Microsoft and Meta. What investors got from each of those large cap tech names late Wednesday was more than amazing. It was flat out noteworthy, given the very large size of these beasts. Meta delivered 22% revenue growth as AI investments are fueling improved ad monetization. Founder and CEO Mark Zuckerberg sounded like an AI overlord on the earnings call, hyping up all things AI. Then there was Microsoft, no slouch on its earnings day. The company's Azure business saw sales accelerate, which has analysts foaming at the mouth with excitement today. Guidance looks solid to me too, although no mouth foaming here. Lost in the robust tech reports is a Federal Reserve Chair in Jay Powell that sounded more like a hungry hawk than a cute cuddly dove at his presser Wednesday afternoon. So lots to dive into on opening bid today, and we'll of course give you the unbeatable context to make decisions with all that money in your portfolio, probably because you own a lot of tech stocks. Let's head down to the NASDAQ in Times Square. Check out Yahoo Finance senior reporter Brooke DePalma. Brooke.
Certainly what we're seeing here is this magnificent run of the NASDAQ up more than 1.4%, moving into the early innings of this exciting trading day. If you take a look at this two chart, what we're seeing is this momentum, this pickup after both Meta and Microsoft not only beat expectations, but also put out forward-looking guidance that really has investors pleased here. As you can see, the NASDAQ moving higher, up more than 1.3%, rallying off of that mixed response after Federal Reserve meeting yesterday afternoon, where Jerome Powell didn't really give any clarity on what exactly will happen come September's meetings. But we're also seeing that momentum move into the S&P 500. We know that the tech industry also makes up lots of momentum when it comes to the S&P 500, and the Dow also moving higher as well. If you take a closer look at the Dow, it's about up 0.1%. But I also want to take a look at trending tickers here. We're seeing, based upon this beat from both Meta and Microsoft, really move into these key AI players. And that's exactly what we're seeing when it comes to CoreWeave here. As you could see, that stock is moving higher, really ripping in this early innings of today's trading session, up more than 8%, nearly 9% at market open here. And that's largely because of Citi upgrading CoreWeave to buy this morning. And they also noted that the demand picture was really highlighted by Microsoft's beat when it comes to their cloud segment, Azure. And that's certainly moving into the momentum here. But Citi also noting here that this is not just momentum that's going to hit the NASDAQ. As we see in the early innings here, we have NVIDIA, Microsoft up nearly 7%, Meta up more than 11%, nearly 12% in the early innings here. But this excitement around Meta and Microsoft and really these key tech players is also moving into the semi space here. If you take a look at equal weight here, what's really moving higher is this data storage company, Western Digital Corp. We see that ticker moving up nearly 6%, now more than 6% in the early innings here. We also have Micron moving higher, or Micron moving down now today, but really what we're seeing here is NVIDIA moving higher as well. We also have AMD moving just a bit higher based upon this news, and Broadcom as well. And this momentum behind this tech play is really playing into these semis as well. As you can see, it's been quite the run so far when you think about what we've seen year to date. A company like Broadcom moving more than 30% higher year to date. And so certainly this momentum continuing, as we can see here, all three major indices in the green this morning, really moving higher based upon these beats from Meta and Microsoft. Of course, we'll get more earnings from big tech later on today as well.
Meta, Brooke, Meta adding $190 billion in market value right off the jump. Shout out to our very own producer John Hyland with that stat. Fascinating stuff. All right, thanks, Brooke. Appreciate it. All right, we're kicking things off with your daily guide to the biggest market drivers of the trading day. Here's what I'm watching. Number one, tech titan and part-time workout buff Mark Zuckerberg delivers and then some. Meta served up a 22% sales increase in the quarter and signaled the good times will keep on rolling as it plows deeper into the AI field. Here's what Zuckerberg said on the earnings call.
Over the last few months, we've begun to see glimpses of our AI systems improving themselves. And the improvement is slow for now, but undeniable. And developing superintelligence, which we define as AI that surpasses human intelligence in every way, we think is now in sight. Meta's vision is to bring personal superintelligence to everyone so that people can direct it towards what they value in their own lives. And we believe that this has the potential to begin an exciting new era of individual empowerment.
Still getting used to Zuck rocking that gold chain. Number two, a profitable co-pilot. Microsoft's own strong earnings report is being overshadowed by Meta's eye-opener, but it was no less impressive to the Microsoft Bull faithful, and there's a lot of them out there, as the company delivered strong sales across all areas of its business, notably the Azure cloud business. The stock now surging above $4 trillion in market value. Number three, Jerome Hawkish Powell. Markets are still trying to make sense of a Fed chair that all but shut the door on a September rate cut on Wednesday, or did he? We'll discuss, and here to discuss is my roundtable for today. BMO Private Wealth Chief Market Strategist Carol Schleif and Yahoo Finance Senior Reporters Brooke DePalma and Ali Cannell. Carol, I want to come off to you at the jump. I thought coming into today's session, a lot of focus was going to be on what Jerome Powell said yesterday. Really, I think shutting the door on a near-term rate cut. But I got to put that aside for a second. Your reaction to some of these big cap tech results, because they've really captivated the market here today.
Right. The markets have been trying to move beyond tariff news, Fed news, all of that stuff, and really get back to focusing on the artificial intelligence move. And Meta and Microsoft actually really gave us a nice excuse to do that. In terms of the tech spend continues, but they talked about how they're seeing some of it come through, and they've got other areas that are proving very profitable. So markets clearly liked that, and actually looping back around to the Fed and the economic news, you got reconfirmation today, basically in the PCE, that the Fed was probably on the right track, just staying on the sidelines for now.
Carol, do we need to finally put to bed this talk of an AI tech stock bubble? When I look at what Meta put up, 22% revenue growth, I believe 500 basis points, or bips, as they say on the street, of operating margin expansion. Microsoft blew it out of the water on every single line item. There is no, I can understand the hype, but these companies have the fundamentals to back it up.
That's exactly right. And they also have the cash to back it up, because it's very important to remember that a lot of prior economic bubbles have been from over leverage in the system someplace that then burst and needed very long time to work out. This time around, we may get there, but we're very early in the process. We're being funded by companies themselves. It's not like the government is stepping in to fund this. And so even the talent wars, the spending they're doing, it's all coming out of cash flow, and they've got big legitimate businesses in the other piece that are happening. The more difficult thing about this, whether it's bubble or not, is the fact that it is being done by the titans, and it's leaving a lot of those who can't compete in the dollar war sort of on the sidelines.
Ali, you know who this news from Microsoft and Meta absolutely sucks for? It's Apple. That's going to report after the close today, and they really have no AI story to tell investors. And if they're trying to, it's not going to be a good one.
Yeah, no, Brian. And Apple, out of all the Mag 7 players, it's really struggled when you have all of these other tech giants soaring. And a big reason for that is Apple, they don't really do the innovation, right? They come in after the innovation's already done, and then they bring out a better product. And when it comes to Apple's AI use cases, it's really more consumer based. And right now we're seeing data centers drive a lot of that growth. We're seeing chip makers. We're seeing how Meta's doing incorporating AI with a lot of the advertising, which we know is a big part of that business. So Apple is going to have to step it up. I don't think we're going to see that in the near term, but maybe for Apple, this is a longer term story, especially when we think about how AI could help on the consumer side, how they could roll out and integrate some of those AI elements into your phone, into those everyday use cases. But I think we're a little bit of a ways off from that, and that's been a disappointment to investors, especially if you take a look at year-to-date shares, really just underperforming relative to the rest of the Mag 7. But I mean, these numbers from
from Meta, Microsoft, it's insane right now. And I think that Julian Emmanuel from Evercore ISI, he called it a cloud mic drop. And I just want to steal that word because that really is what it was. Just huge numbers, beat and raises, exactly what you want to see in this type of environment. And sources have told me exactly what we were just discussing. The fundamentals are there, earnings are strong, so you can't call it a bubble, at least not at this point. And I think there's just more room to run, considering how early we are in this AI process.
Allie, real time, hit with the mic drop. You got to do it. There we go. That's what we're all about. We got to keep it fun here at Yahoo Finance. Brooke, you came out hot this morning looking at how these numbers are starting to spread into some of these derivative trades. You called out CoreWeave, but wow, it's clear that investors are looking for other opportunities. If they missed the boat on Microsoft and Meta, they're trying to not miss the boat on some of these other AI trades.
Yeah, what's really interesting here is when you think about this beats from Meta and Microsoft, Citi saying in a note that Microsoft is roughly 8% of AMD's sales and Meta is roughly 2% of Broadcom sales. And what we're seeing in these early hours of trading here, when you take a look at the interactive, is really this momentum behind these semis that are moving markets here. We see AMD slightly up. Of course, NVIDIA really leading this AI revolution here, and that stock also gaining some momentum here as well. But it's an important narrative to follow because these are the companies behind these tech platforms powering of this AI revolution. These are the ones that many, including Citi and others, think to watch. When you think about the run that Broadcom has had leading up to this very moment in time, year to date, this is a company that has seen a nearly 31% rise from January, despite that April low. And there's been so much concern or risk around what this could look like. But Dan Ives, who always touts really what we're seeing in this AI revolution, complete bull there, he really said that this is a tear shed moment in the AI revolution. He said that there is so much more momentum to run. And that's certainly the excitement that we're seeing here on the street this morning. Microsoft hitting that $4 trillion market cap, moving higher nearly 29% year to date, and this morning up more than 5% as well.
Carol, I could talk about these big cap tech earnings for the next 20 hours straight. Just feed me the coffee. But I do want to get your thoughts real quickly on the Federal Reserve. A more hawkish sounding Fed Chair Jerome Powell yesterday. We had the PCE index out this morning, accelerated month over month. Once we get past these tech earnings, is the groundwork now set? If we're not going to get a rate cut, which kind of became clear yesterday, is the groundwork set for a short-term pullback in markets?
Not necessarily a pullback in, and it's important to take each of these economic numbers and parse down underneath, because what the Fed told us yesterday is they're very, unlike other central banks that only have to take inflation into account, they also have to watch employment. And there's a lot of issues coming on employment. We got a big, it'll depend on how the numbers come in tomorrow, because that could be the catalyst between the tech earnings we get this afternoon into employment tomorrow, because the employment market is showing it's in a very delicate balance right now. And so you need to, and Chairman Powell called this out yesterday, that one of the key statistics they're watching is the unemployment rate. So if that were to have some big jump up because of one side or the other in terms of people pulling out and not looking as much, and or companies just not hiring as much, and that jobless rate starts ticking up, then the Fed's going to look at that, and that does tee up the room for a rate cut, because they do have a dual mandate, unlike the other central banks.
What would be a bad report in your view, Carol? Anything under 100,000?
Yeah, I think there's that piece of it, and or if the jobless rate unexpectedly moved up to 4.6, 4.7, something higher than people are expected, because it's been at very low rates, and those are still low rates, but they're higher than they have been, and it would seem to indicate that balance is out of whack. But the important thing is to remember too is we haven't seen the full impact of tariffs come through. We're getting some of the final outlines of deals, or at least rates set here this week. And you've also got sectoral tariffs coming through. So what companies do with hiring, because you've also got CEOs crowing about the fact that they're able to limit or reduce hiring because of the AI deployment that they're doing.
All right, a huge thank you to my contributors for today, Carol Schleif, Allie Canal, and Brooke DePalma. Appreciate it. Straight ahead, Wingstop CEO Michael Skipworth is coming in for a landing on opening bid. Shares of the chain surged 26% on Wednesday following better than expected earnings. As you can see on the chart, Wingstop has been a growth story from its sector, with shares up 131% in the past 5 years. Welcome back to Opening Bid. I'm locked in on a bullish call from Citi analyst Tyler Radke on CoreWeave. It comes on the heels of those blowout earnings from Microsoft. Says Radke, though we still expect some trading volatility into lockup expiry starting on August 15th, we come away with a much stronger fundamental view on the demand picture, highlighted by Microsoft beating on sales and raising guidance on Azure. Radke's $160 price target assumes about 40% upside from current price levels. All right, for our Power Player segment today, I wanted to code the quarter and outlook from Wingstop. The stock shot up 27% on Wednesday, despite domestic same-store sales falling 1.9%. The company talked about pressured consumers on its earnings call too, yet investors appear to be taking their cue here from Wingstop lifting its outlook for new restaurant openings and sales not being as bad as feared. Wingstop CEO Michael Skipworth is here with me now. Michael, always great to get some time with you here. So, look, I'm sure you checked your stock price on the Yahoo Finance platform. Big day for you. My question to you out of the block here, Michael, is the business that strong to justify a 27% stock price increase in one day?
Brian, there's a lot of runway in front of us at Wingstop, and I think our Q2 results really showcase the strength of our business and the staying power of our strategies. We set a record for our brand in Q2 of 129 net new units. We, as you mentioned, we raised our outlook for the full year to 17 to 18% unit growth, which is industry leading. And I think it really speaks to the strength of our unit economics. And I know you referenced that decline in same-store sales of 1.9% for Q2, but the way we look at the business is we take a step back and look at the last 3 years. And if we stack our same-store sales over that period, it's over 40% growth. That's translating to stronger unit economics, which are showing up in our returns for our brand partners, and obviously fueling a record pipeline for development.
Last week, Michael, we heard from Chipotle, cautious on the consumer. Yesterday, I had the opportunity to talk to Starbucks CEO Brian Niccol. He sounded a little bit cautious on the consumer. Their transactions were down. Your sales were down, even on tough comparisons, but still they were down. Where are you seeing that consumer weakness?
Yeah, Brian, we see pockets of softness in our business, and it's not broad spread by any means. And what we're really excited about is some of the things we're able to do in our proven playbook, where we lean into bundles, like a 20 for 20 promotion that we just ran, that's showing the consumer an opportunity to lean in and indulge with Wingstop and treat themselves. And we're able to showcase quality, that cook to order sauce and toss unique Wingstop experience, and that delivers value to the consumer. And so we're pretty encouraged by the way we were able to continue to strengthen the overall unit economics of our business. But when we look at what's ahead of Wingstop and what we're really excited about is the implementation of our new kitchen operating platform, Wingstop Smart Kitchen, which is driving a materially different result in the markets that have that platform today versus those that don't.
Are you going to have to stay promotional, Michael, throughout the summer into the fall to try to get some of these more cautious consumers through your doors, especially as football season starts?
You know, I think there's a lot of brands out there that are having to be very promotional, and those brands are actually having to do that at the cost of giving up some of the margin on their P&Ls. And I think for Wingstop, we have a proven playbook, leaning into bundles. We're able to showcase quality and value to the consumer in a way that doesn't compromise any of the economics on our P&L and actually runs a really great food cost for our brand partners. So we'll find ways to lean in, whether it's through more bundles or whether it's through flavors that drive engagement with our guests and continue to drive the business forward.
There's a lot of reinvention going on, Michael, within kitchen operations. I see what Chipotle is doing now, hanging cameras over their make line or where you pick up the food to drive better efficiencies. I see Starbucks trying to bring its mobile and order lines down a bit. Your smart kitchen that you just mentioned, what is it, and what have been some of the early takeaways when you've put this into your restaurants?
Brian, Smart Kitchen for Wingstop, we're actually referring to it as a game changer, and that's exactly what it is. And it leverages artificial intelligence, and that artificial intelligence feeds into this new kitchen operating platform that is using gamification, imagery, and enables our team members to reduce average ticket times by approximately 40%. And I've never heard of another brand that's been able to take that much speed improvement in their average ticket time. And for us, it puts us in the consideration set where a lot of occasions we weren't there before. And so as you look at restaurants where we've implemented this solution set, which we're in over 1,000 restaurants today, and we're on pace to implement this system-wide by the end of the year. But these restaurants are seeing a mid-single-digit spread in same-store sales growth. But in addition to that, they're delivering an average ticket time close to 10 minutes. We're seeing improvement in operational metrics. We're seeing a material improvement in guest satisfaction scores. And it gives us a ton of confidence that the growth in front of us, and as we take our brand from, which has an average sales volume of $2.1 million today per restaurant, towards our goal of $3 million over time.
Internally, Michael, do you view your business as tariff-proof?
I would say, Brian, if you look at the input costs to our business, we're not really exposed to any of the tariffs that have been talked about here recently in the news and anything that's coming through. But obviously, where we look at it and what we're focused on is how do these tariffs ultimately impact the consumer? And that's, again, where we're going to lean into our proven playbook to deliver quality and value to the guests.
How are you modeling your outlook for the start of the NFL season? How do you, with your team members say, you know what, we had a big NFL season last year as everybody bought wings, but how are you going to crank it up even more? And then what are your sales expectations?
Yeah, we anticipate returning back to growth as we exit Q3, which lines up with the football season. But one of the things we look at is Q4 is going to be our highest quarter of media spend for the entire year. So we're going to lean in and drive engagement. We're excited about continuing to expand our partnership with Amazon on Thursday nights. But we're going to continue to lean in and show up in a big way. And if we look at the opportunity we have at Wingstop to scale brand awareness, it is huge when you benchmark us against other more mature, established national brands. And so we're excited about continuing to chip away at that, and that growth being fueled by, and the opportunity to present Wingstop to guests being fueled by that Wingstop Smart Kitchen I talked about earlier.
I will refrain from asking about the impact of the Amazon campaign because, lastly, Michael, I think the stock is really, it traded up significantly because you raised your outlook for how many stores you can open. What is the ultimate potential in the U.S. and internationally for Wingstop? How many restaurants do you think you can get to? And when?
Yeah, absolutely, Brian. We're really bullish about the demand for growth with our brand partners. I mentioned earlier, our pipeline of sold restaurant commitments sits at a record level, and that's after opening 255 restaurants the first half of the year. And so it just speaks to the strength of the unit growth story here at Wingstop. And our outlook that we provided, that we increased on the call yesterday, puts us at hitting the milestone of 3,000 restaurants. But really, Brian, we're just getting started. We have line of sight to over 10,000 restaurants.
10,000 restaurants. How long would it take to do that, Michael? Is that a decade?
It's going to take probably less time than we think. But we have a long-term target of continuing to scale this brand at an industry-leading unit growth rate of 10% plus. And obviously, a year like 2025, we're over-delivering on that target in a big way.
Well, I'll say this, and I think you and your team know this. Wingstop is my cheat food. So when I cheat once a month on something, it's often with a couple wings. Wingstop CEO Michael Skipworth, good to see you, and we'll talk to you soon.
Thanks, Brian. Take care.
All right, programming note, tomorrow in our Power Players segment, I'll be talking with the founder and CEO of Roblox, Dave Baszucki. Looking forward to that chat. All right, the trading day is underway, and in financial markets, every second matters. What you do right now could determine your financial future. So here's my forward-looking thought of the day, folks. We have heard for the better part of a year, aggressive AI spending by tech companies would hammer their bottom lines and then their stocks. That thesis is proving really, really wrong. Just look at the results from Microsoft and Meta. AI investments are actually fueling their top and bottom lines. So be wary of those down on AI. Chances are they have never used a Microsoft Copilot before. Coming up, Yahoo Finance's market catalyst, Julie Hyman, will be continuing the analysis on the big earnings reports from Meta and Microsoft. Stick around.